Welcome to the FNO InsureTech podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Lee Boyd and Rob Beller.
Hey, podcast world. Welcome to an unusual,
Interesting,
unusual,
sophisticated.
and good luck with this one episode of FNO InsureTech. We have Eyhab Aejaz back for episode 2 to talk all about crypto. What the heck is this?
Yeah.
What does it mean? Where's it going? And this is for all you people like me who don't know so much. And we're going to talk about crypto. We're going to talk about blockchain. We're going to talk about distributed ledgers. We're going to talk about transparency.
Someone took a few notes.
Yeah, well, I'm just reading off my vast notes that I made for this particular podcast.
We're going to talk about it all.
Right. And so if you're in my camp, and that's the camp is, I understand a dollar bill, but I don't understand crypto, you're going to want to listen to this.
Yeah, this is like saying I understand a dollar bill, but all the stuff behind it, all the stuff that actually makes up that dollar, we're going to get to learn about that here with the Bitcoin. I mean, this is not a college lecture on Bitcoin. This
Not
is
at all.
Hey, let me tell you a little bit to get you interested.
Right.
And that way you can at least talk about it at parties.
Right. And it's something that I can understand, that you can understand. And also we talk a little bit about Eyhab and how cool it is that he's on the cutting edge of all this crazy stuff that, more than half the world still doesn't have any concept of what it is.
Right. And we really hope you've already listened to his podcast all about breach. If you haven't, make sure you do afterwards.
Right.
But he is on the cutting edge of insuring crypto and theft of crypto. And that's something that didn't exist before he started. And I think that's really cool.
I bet a lot of you out there didn't even know you could steal crypto.
Well, you can.
Yeah. Wow. So anyways, without further ado, here is our episode about crypto, not about InsureTech, but about crypto. We're doing this as a public service to people who are slow like me, or people who aren't slow like me. And so here's our episode. Hey, everybody, we are back with our friend Eyhab in an attempt to talk about crypto and come to some level of understanding about it for people like me,
right,
who have literally none other than I've heard of it, I read about it, it's all over the news and everything. I know it's a big deal, but I don't actually understand what it means in the inner workings of it. And so for those of you who are like me, you want to keep listening. For those of you who say, oh, I know more about crypto than anybody, you can wait for our next episode. Is that fair to say, Lee?
Sure, but I think it's always a good idea to listen. Somebody might learn something.
Well, in that case, everybody listen. So welcome back, Eyhab. Thank you for being with us again. And we're going to jump right in and let's just talk about this crazy thing. So let's start with level setting on a definition that makes sense. And that is, what is cryptocurrency? Or can I even ask that question?
You can ask it. It's a digital representation of an asset. Like what that means for different use cases, I think varies. So it could mean 1,000 different things, literally, because it could be, in the form of art. It could be in the form of a contract. It could be in the form of a security. It could be in the form of a commodity. But yeah, I'd say it's just a digital representation of something that has some kind of value. And that value could mean, as I said, a bunch of different things.
So does that mean it's backed up by something?
Typically technology or a representation of something. But yeah, I think most cryptocurrencies should have the backing of some kind of utility. I would say that's probably what it's backed by, some kind of utility, kind of like question you could ask is, and I kind of shared this last time, is, are airline miles backed by anything? They're backed by a product that, gives you some kind of reward mechanism to be able to utilize those points or miles for something. And I think that's a great analog for what crypto, I think, will evolve into being for laymen's like us.
So they're backed by a system in that case.
System utility. Yeah.
Mm-hmm.
Yeah.
Whenever we're talking about cryptocurrency, you went a little more broad than I even thought about. So cryptocurrency can be what we all know of as Bitcoin, right? Bitcoin's a big one out there. But then we also have those NFTs or digital art, right? Digital things. Is that also considered cryptocurrency?
Yeah. And I think cryptocurrency assets, I think is the further description that's probably a pretty important one. But yeah, for me, I mean, you could ask somebody else that says, no, that's not, cryptocurrencies are just Bitcoin, ETH,
just the coins or
coins that are listed. But I think the world that's being built here, the infrastructure that's being built here, there are these vast crypto assets, and they come in different forms with varying utilities.
Why is there cryptocurrency? Why does Bitcoin even exist?
To me, my understanding has been to really help with a lot of the inefficiencies that exist started with financial services. What you and I see is credit card and the ability to spend it in places. And I think that works. But then when you and we think it's really efficient, but then when you peel back the onion, you're like, man, there's settlements, there's credit card processors, there's credit card companies like Visa and MasterCard, and then there's the banks, and then so it's tremendously inefficient, and there's a lot of mouths to feed, and that's why we pay so much for credit card fees. It's why we earn so little in our savings accounts. And I think the whole premise around it, what the foundation around it, to me at least, was creating a true peer-to-peer, very, very efficient network that allows people like us in this call or podcast to be able to disintermediate all these intermediaries, even if it's just one intermediary.
Right.
The goal is to disintermediate all of them. And let me.
So, if I was to buy your Tesla from you, because I know you have two of them. So
I don't have any. I'm a poor founder.
Just dreaming.
In the future, I could buy it with Bitcoin.
That's the idea. Yeah, exactly. As long as I find value in it.
Mm-hmm. Which isn't that really the definition of currency, right? As long as the other person agrees that it's worth something, it's worth something.
Call it a transaction, call it bartering. You could barter, right? We do that on Craigslist. I'm going to give you this, awesome oak table that, has been passed down from family to family for that lawnmower that I really need right now. Is that a currency? It's debatable. It's a mode of trade.
So who issues cryptocurrency? That's what gets me. Like dollars, I can understand. Dollars, we not arguing the value of a dollar, but dollars are issued by the United States, by an arm of the United States government, right? So theoretically, the United States government stands behind a dollar. Who issues crypto and who stands behind it? Or does that even matter?
I'm going to take this to the 60-yard line, and I'm going to encourage everybody to go out there and build on that and really decide for themselves. But what we should start with is, Bitcoin. There is this anonymous person that we still don't know who it is, a person, an individual, an entity named Satoshi Nakamoto that, created a technology, blockchain, peer-to-peer network that created 21 million of these Bitcoins. And the whole point around that, why there's a case that it isn't a security, because there's a finite amount of them. You can never create more. It's more of a commodity with a finite number of these assets. And the use case is transacting, peer-to-peer transacting. That was the mother or the father of cryptocurrencies, and there's been a number of others with varying use cases. And I think the knock on or the nuance, not even the knock, the nuance is that they come with their own, minting rules.
Yeah.
And they can be more minted. I think that the idea though is that there is this still what's somewhat consistent is that this is a centralized body that isn't a corporation that typically some kind of foundation that controls how they can be minted, how people can prove that transactions took place and whatnot. But those rules are set by a centralized body or a foundation, and typically it's who's minting them or validating the transactions.
Help me understand mining. So you always hear that you're having to mine this currency. The Bitcoin has to be mined, and there's a fixed number of Bitcoin, for example, out there, but they're not all found or they're not all dug up virtually. And so how does somebody mine Bitcoin?
Computing power. They have computing power that's able to say, Lee wants to send Rob, XYZ amount of Bitcoin. That it can only take place once a network of these miners have been able to prove that transaction is actually taking place. And that happens with utilizing computing power. I think the case behind the security and everything around it is that around Bitcoin and the viability of it is that it burns energy, because energy is one of these things that is valuable. And that is what, in a weird way, creates the value of these Bitcoin crypto assets, is that you're burning it to create some of it that then pays the miners, because they're validating the transaction between Lee and Rob. It pays them for their work. It's like you hold your weight in confirming that this transaction took place. So of the amount that's left to mint, which is I think like 3 or 4 million, and it's like decreasing because it's like, a supply and demand kind of thing. I think that's kind of like naturally how it's taking place, is like as time goes, you're minting a smaller and smaller fraction of a Bitcoin to validate those transactions.
And then each one takes more energy, right? As you go, it's harder. And I don't really understand the whole computing. Is it just answering a bunch of questions, or is it just moving through all the Bitcoins to make sure? I don't really understand that.
I haven't done it myself, but there's like actual Bitcoin software.
Oh, is it really?
Has to be run on the mining servers or mining computers. I don't think there's anything manual that's actually taking place. I think it's the software that's doing that work, but
I see.
It uses energy and the internet to be able to do that.
Help me understand blockchain. You mentioned it before. Blockchain.
You've been trying to figure out blockchain for 3 years.
Shut up.
Can I start by asking you what your understanding of it is, and then we can kind of build from there? Because I'll be honest, like I don't think I'm the best person to explain it. I never have. And
well, blockchain is a critical part of crypto, right? So why? What is it? Lee,
you want to build on that? And I'll build on that.
I don't know all that much, but I believe it's more of a transparent way of doing transactions, right? It allows everything to be transparent, and it's supposed to stop things from cheating and fraud. And so like a Bitcoin, right? You buy a Bitcoin on blockchain, you're supposed to be able to see that. The whole group is supposed to be able to see the transaction to keep everyone in line and to keep everyone honest. That's my at a high level understanding of it.
Yeah. No, I think you're spot on.
It's different machines talking. I went to a conference one time and Bitcoin was blockchain was the first. It was almost like a network. I connected to Rob connected to Eyhab, and then I could see all those. I could see those transactions growing. And then everyone is in my network that I just started with Rob because it was blockchain. It was big, like a big spider web, just kept going out. That's, to my understanding,
a distributed ledger enforced by a desperate network of computers
that is completely public and transparent. Like we're seeing if JP Morgan and Goldman were both transacting and loan was being borrowed or repaid, it would all be very public and none of these behind closed doors arrangements. Yeah. If a company was hacked and a wallet was drained of its assets, it would be very public. If I am laundering money, if I am, abusing my power and spending money that I don't have, whatever it may be, it's all very public. I think it's, to your point, it's a peer-to-peer. Mm-hmm. At its core, it's a peer-to-peer network that gets validated by, an anonymous community that gets compensated for doing that work. But the whole second side of the equation is that it's completely transparent. There's like blockchain explorers that you can actually like search transactions and you can see what wallets, and there's like really interesting advanced forensic tools out there that can show that Rob has got this main wallet, but he's got these like 6 or 7 secret wallets that are connected like all over the place. And he's trying to be sneaky and transfer money and assets here and there. But and I think that's part of what scares people. It's like, wow, like I can't really, just hide what my Venmo payments are anymore. It's all quite public out there.
Yeah.
Is Venmo blockchain?
No, it is not.
Okay. So the advantage is the transparency.
Yes.
And I would think that a lot of people would be very uncomfortable with that.
You mean people knowing how much money they have, or
you can watch my financial life happen.
I mean, there's like off-chain tools as well, right? Like, so I'll give you an example. If Coinbase were to be my bank, the initial transaction that I make to Coinbase is public, because you could see like what my wallet is sending Coinbase's wallet. From that point onwards, it's effectively like Fidelity or whatnot. I could be buying, selling crypto assets, and it would all happen off-chain. You're not wrong, but I think there are a significant amount of people out there that, although it's uncomfortable, I think they believe that it's better for everybody, particularly the little person, when everybody has to kind of be transparent in what their true incentives are. It's more so like, I don't know, just sometimes you see, I think the thing that comes to mind for me is like sometimes you see politicians lobby for one thing, but trading that same stock on the other side. Right. It's interesting. I think that a lot of those kind of things come to light when everything has to be transparent.
So does this transparency help you with breach insurance?
Absolutely. Yeah. As we're insuring crypto that's held, custodied, in the event that there was a massive hack event, there would be this on-chain transaction where crypto assets would be bled. But absolutely for our core product, for sure.
And for your forensic, after the fact.
Yep. That's why I referenced it. Exactly. You get to see what wallets are tied to one another. It's really fascinating.
Is crypto safe? I think in definition, it's safe. Isn't it when the wallets start being shared? Is that when if it's just one wallet, you have all that. But whenever you go to these big databases, big exchanges, that's where it's important to have the insurance, right?
Yeah, I think all over the board. I actually think that the exchanges are safer personally.
Okay.
So everyone should do their own research, but I think the exchanges are a little bit more safer than custodying yourself, because there's a lot of like the social engineering stuff that happens. There's something that I read this morning that somebody sent a PDF to somebody, and it had a virus like embedded into the PDF, which I personally didn't even know was possible.
I didn't even know that was a thing.
Yeah, it's a thing. And, I get LinkedIn messages a lot from like people trying to sell me services and viewers that want to, and I don't click any links. Like if I don't recognize the person, like personally, and even sometimes when I do recognize a person, I'll text them on the side of like, hey, like, was this you? Like, are you sending me? So point of me saying all that was, these exchanges have become very sophisticated, and the ones that are well capitalized, the ones that haven't been very reckless about their own trading and lending activities, I think are just generally safer for me, for my life, for how much time I can invest in hygiene in this world. Because when you're custodying yourself, and you have to just really be thinking 3-4 steps ahead and how you want to, protect your seed phrases and your private keys, where you want to store your keys and your seed phrases and your passwords, should they exist. It's like, I don't trust myself.
No, I can't remember my password I set this morning.
Yes.
Yeah,
exactly. Help me understand the value side of this. So you can buy Bitcoin right now today. I'm just looking, $20,556.90. Let's just say $20,000. And I see that on November 8th, it was $67,000.
Mm-hmm.
Mm-hmm.
Why is that? That makes it feel like it's a stock or something, an asset that, fluctuates in value due to the asset that it's representing or backing. Why does it have a price, and why does it fluctuate?
Just like anything that has, supply and demand, people that want to buy, people that want to sell, it will fluctuate. And I think what's happened in the last 6 or 8 months has been, nothing short of catastrophic for all investing sectors,
right,
including tech, particularly tech stocks. And crypto is I think no exception to that. I think a lot of folks, and I actually believe as well, that it is very much not correlated with stocks, but still, when people are in pain, financial pain, they look for comforts. Like, where am I going to get that from? I've made some money on Bitcoin. Let me recoup that, because I'm putting here on my Amazon stock or my Tesla stock. So I can't lose this, because this is my retirement or my kid's wedding or college fund or whatever that might be. So I think that's how it's correlated, because everything in assets, the only thing that hasn't been impacted yet has been, I think, real estate. But I think that those are things that's probably going to come too, because it's just a longer sales cycle. It's not as liquid. You can't just sell it on a market.
Right.
And also, I think at 67,000, every single person at that point had made money on crypto.
Yeah.
So think about it from that standpoint. That's the all-time high, right? There's nowhere but down when there's a massive liquidity crunch and people are in pain. It's like, hey, I'm up. I'm selling this thing. So the only people at that point that are losing money are the people that bought within the last month, which is a very small fraction of individuals. So I think the whole story is an important one to kind of recognize. But I think it's also like there's been a lot of, and that's like macro, but crypto specific, there's been a lot of unfortunate things that have taken place, as it relates to, certain stable coins, some certain lending activities, scams and whatnot. But I think that the most important takeaway for me is that there's been a tremendous amount of infrastructure that continues to be built. And as scary as this market in general is, where, I started this company in the middle of the first crypto winter, or maybe some say it's the second crypto winter in 2019.
Yeah.
Man, market cap for all of crypto was under $100 billion. Investors were like, is crypto dead kind of thing. And you're not hearing that. Instead in June, I think Charles Schwab, Fidelity, and another company. There's three major asset managers, custodians that came out and said that they're building a platform for traditional brokers. So to be able to distribute crypto and invest in crypto for the masses. And it's due to come out by the end of this year, beginning of next. So, there's a lot of interesting things that are happening. And I think the other thing is that the infrastructure is is dating itself. It's like our rails and our highways in this country. It's a lot of there needs to be some modernization of our equities market. Nobody knows, a company stock could be bought and sold on 10 different platforms, but are they selling more than it exists? We saw this, right?
Right.
How do you fix that? And I think a lot of people are looking at like, oh, there's a settlement issue. There's a lot of issues that are happening. Like, but how do you do that? Oh, maybe if you have it on a transparent ledger.
Transparency, absolutely.
So these aren't my words. Like these are like, I think the themes that I'm personally starting to see with friends of mine that are building companies that are getting invested in, and investors that are finding themes. And what you're seeing is everybody has a crypto angle now. Everybody on Wall Street, everybody in the equities market now has like some kind of bend into crypto because it seems like a natural evolution for at least the infrastructure.
Does it eventually supplant currency, like traditional currencies? Is that where it's heading, or what it aspires to?
It certainly seems like regulators are doing something with it. There's like regulation that they're trying to create these central bank, fiat currencies. There's a modernization that needs to exist there as well, right? Like the concept of paper money, like who wants to pay that? Who wants to use that anymore? Like I dread getting paid or having to pay in physical dollars. Right. COVID reasons. There's like,
dude, this weekend I had a little yard work done at my house. I had a tree guy here and he wanted to be paid in cash. I had to go find an ATM.
Yeah.
Right. And I did. And then I couldn't remember my ATM password.
Yeah.
And fortunately my wife was with me and she remembered hers. And so we got some cash, but yeah. So
exactly. Yeah. And my wallet is like this big. It literally can't even fit cash. So yeah, I think you kind of have to, in my opinion, you kind of have to create a digital representation of fiat currency as well. And, call that crypto, call it a digital dollar. I don't really care, but like it should exist. And I think it should be transparent of how many, and there's that tracker in New York City that you see like what our deficit is and how much.
It's quite depressing.
It kind of already exists, right? So why not just hold people? And I think it would hold all of us accountable, and people, including people that we put in office, and how we're allocating certain initiatives and whatnot. I think it's good. I think it'll be good. But.
So now that we have all this kind of foundation, tie it all up with Breach and how it fits together.
The theme is that more and more financial services companies have some bend into crypto, digital assets, blockchain technology, Web3, however you want to define it. And it's a mystery to the broader insurance industry on how to underwrite that, what the risks might be, what the exposures might be, how do you price that? We're just uniquely positioned to do that. And that's where we're really leaning in to make sure that as these industries adopt crypto, and as crypto native companies that are standalone crypto that may be adopting financial services, you're seeing that as well, actually. It's both sides, right? So both of them should be paying attention to who is trying to really control the rhetoric. It's a massive risk transfer issue, and we're really trying to take the problem seriously and make sure that there's consumer protection in place, and that comes via insurance and regulated insurance, importantly.
I would think that the consumer protection aspect of it, it's mind-bogglingly huge.
Yes.
Right. Like Lee offline before we started today brought up the FDIC.
Yes.
And, that he read, something about the FDIC and crypto. And government agent, the opportunity for problems and abuse are no smaller, in fact, larger, right, than traditional financial networks that have been established, for a century. And so to be on the cutting edge of that, to be at the starting line, it has to be not only exciting, but kind of dizzying, right? I mean, wow.
I love it. Yeah, I love it. I mean, I think there's few opportunities that you get to make like the insurance pie bigger, right? We're not just taking premiums from one and repositioning it. This isn't a distribution efficiency. We're making the pie bigger, and we're creating jobs, and and we're getting to work on an interesting problem. And it is not dizzying yet. I think where I'm particularly proud of our team is like we haven't gotten distracted. There's a lot of things that could dizzy you where you're like, yeah, that's exciting. That's on the press. Right. I get interviews, and I get reporters asking me like, oh, so when's the metaverse insurance solution? I'm like, we'll research it, but I don't think we'll have anything remotely close to an insurance product for 2 years. There's so much low hanging fruit to work on right now. Right. If we chased every single opportunity that came to us, we would kill ourselves as a startup. You just cannot, because you also have to have the pragmatism to be able to say, you know what, this is like exciting, but it's not something that customers are wanting yet. It might be something that could be buzzworthy,
you have to be pragmatic, but disciplined.
Yes.
I mean, because like you said, you're in a toy store.
Yes.
And there's all kinds of toys that you could play with. And so to sit down on the floor and just play with your one toy has got to be a little difficult when you're surrounded by shelves and shelves of other ones and new ones arriving every day, right? I mean, we didn't even talk about all the crazy names that are out there.
That's right.
In this world. I mean, this conversation could go on and on and on, but just to bring this to a close so everybody knows. So we asked Eyhab to be here today to talk about crypto. Thank you a lot for doing that. And we want everybody to know that we're paying him in crypto for this today.
He says, great, thank you.
So if we wanted to do that, how could we do it?
So I think the problem is that Rob still doesn't understand that crypto is a thing.
How could we do it?
I wouldn't accept it. I could teach you. I'd love to get you in the system, but
beautiful. We will close with that statement, which might become part of our new intro every week to the podcast.
All right,
Rob, I wouldn't accept it from you. So it's beautiful. Listen, thanks a ton for coming back.
That was great. Thank you.
Yeah,
you're probably the quickest 2-timer we've ever had.
Cool.
And just remember, when you're on our podcast 5 times, you get the 5-timer jacket.
Mm-hmm. Okay. You get told about it. We're still waiting to actually order them.
Yeah, we don't. They're digital.
They're digital.
It's an NFT.
There you go. That's exactly. We need to create it.
There you go.
We'll get Al on that.
We'll leave it at that for today. Thanks for coming back. Appreciate it.
Thank you guys for having me.